But the lesson I can give you is a few is all you need, and don't be disappointed. And when you find the few, of course, you've got to act aggressively. That's the Munger system.
Munger emphasizes 3 key principles to achieve substantial returns using small investments. Before embarking on your journey as a new investor, it's crucial to grasp this vital lesson first.
This question is for Charlie. Warren and you are known for saying that if you work with a small sum of capital, namely I think being $10 million, Warren had probably said that he could guarantee that you compound that at 50% a year. So my question is, can you provide some examples? And I would kindly ask you to provide as many examples as possible and be as specific as possible. Thank you.
Well, and then I hear somebody that really wants to get rich at a rapid rate with specifics. That is not what we try and do here. We want to leave some mystery so that you can amuse yourself finding your own way. You know, the good ideas that I have had in my life are quite few. But the lesson I can give you is a few is all you need, and don't be disappointed. And when you find the few, of course, you've got to act aggressively. That's the Munger system. And I learned that indirectly from a man I never met.
Charlie learned some important lessons indirectly from his mother's maternal grandfather, a pioneer in his own right. He faced incredible challenges, yet managed to become the richest man in his town, owning the bank and much more. In his old age, he imparted some wisdom to Charlie's mother, which she passed it on to Charlie. Lesson 1. Grandpa Ingham used to tell my mother that in life there are only a few opportunities that can truly change your fortune. He bought a few farms during times of financial panic and leased them to thrifty German settlers. Even though he could lose money leasing a farm, he made strategic investments that paid off very well. Lesson 2. Some may choose to make their living by leeching off the trading system, but it's not the most honourable path. Instead, I believe in making money in ways that add value to society, and outsmarting the trading system isn't one of them. Lesson 3. You must invest in yourself. The complexities of the modern world demand continuous learning and adaptation. Lastly, as you accumulate wealth, I encourage you to be charitable and give back to society. So in essence, focus on a few meaningful opportunities, make your money ethically, and be charitable with your wealth. It's a recipe for a fulfilling and honourable life. Now to the 3 principles of generating wealth from Charlie Munger. If you've ever wondered how to follow the advice of the legendary Charlie Munger, who serves as the vice chairman of Berkshire Hathaway, the first principle is to look in the inefficient markets. Despite Berkshire Hathaway's massive market cap approaching $760 billion, Munger acknowledges that this size can be an impediment to generating high investment returns. As of the making of this video, Berkshire Hathaway is the 7th largest company in the world by market cap. But why is this massive size not always an advantage for investors? Well, Charlie and Warren have repeatedly said that Berkshire's size forces them to focus on large investment opportunities. The problem is that large opportunities are often well-researched and less likely to be mispriced. Meanwhile, smaller investment opportunities tend to go unnoticed by big investors.
I was working with a tiny amount of money. And so I would pour through volumes of businesses, and I would find 1 or 2 that I could put $10,000 into or $15,000 into that were just ridiculous. They were ridiculously cheap. And obviously, as the money increased, the universe of possible ideas started shrinking dramatically.
So this is where the opportunity for you comes in. You can leverage the internet and stock screeners to identify potential mispriced stocks. Let's take a look at how you can do this. Head over to a stock screener like the one on your screen. You don't need anything fancy. A free screener will do just fine. Set your filters to focus on companies with a market cap ranging from $10 million to $150 million and a PE ratio between 3 and 14. The companies that meet this criteria will be considered small by Wall Street standards. Most professional investors have restrictions that prevent them from investing in stocks below a certain market cap, which means these smaller companies often go unnoticed. Now let's move on to the second lesson from Charlie Munger, taking big swings. When a good investment opportunity comes along, Munger advises investors to seize it. Great opportunities are rare, and when they do come, you have to take full advantage. To illustrate this point, let's turn to a baseball analogy. In baseball, a batter waits for the right pitch in their sweet spot to increase their chances of getting a hit. Being patient and waiting for the right opportunity yields a higher success rate. Warren Buffett, Charlie Munger's business partner, explains this concept, reflecting on his early days of investing with small sums of money. Just like in baseball, you need to be patient and wait for the right investing opportunity that perfectly aligns with your strategy. Munger believes that the perfect pitches or investment opportunities are not common, so when they do come, swing for the fences. Principle number 3, don't be afraid of a concentrated portfolio. Charlie Munger's third lesson challenges conventional wisdom.
Diversification is for people who don't know anything. Warren calls them know-nothing investors.
While many suggest highly diversified portfolios, Munger believes that's not the path to generating high investment returns. Instead, he advocates for a concentrated portfolio focused on businesses you thoroughly understand. Munger himself has the vast majority of his family's net worth invested in just 3 assets: Berkshire Hathaway stock, Costco stock, and a fund managed by Li Lu. This concentrated approach allows Munger to make informed decisions and increase the likelihood of achieving exceptional returns. Munger emphasizes that sticking to what you know best and maintaining a concentrated portfolio can be a significant advantage in the world of investing. To drive the point of a concentrated portfolio further, Charlie Munger shares the story of his friend, John Arrillaga. Arrillaga, a billionaire investor, concentrated his investments within 1 mile of Stanford University over 40 years. Despite numerous opportunities outside of this scope, Arrillaga's focused approach made him one of the wealthiest individuals in the world. Munger highlights this as an example of the advantages of maintaining a concentrated portfolio and sticking to what you know best. In conclusion, if you want to follow Charlie Munger's advice on generating high returns on small sums of money, remember these 3 key lessons. Look in inefficient markets, take big swings when the right opportunity comes, and don't be afraid of a concentrated portfolio. Munger's belief in a concentrated portfolio challenges conventional wisdom and emphasizes the importance of focusing on businesses you thoroughly understand. By following these principles, you can increase the likelihood of achieving exceptional returns in the world of investing.